guys, Todd Gordon of TradingAnalysis.com. This is the free video update for Tuesday, December 16th. So we've seen a good correlation with the S&Ps and crude oil. I'm going to show you two things in this video. One, how far down crude oil has to go. And number two, how we're looking to trade the S&P on it. All right, guys, let's go to the charts. Okay, guys, let's dive in. Let's do a 24-hour overlay of crude oil and the S&P futures. Okay, so we'll just bring this chart up. This is going to be a 60-minute. And you're going to see that these two markets have been very closely correlated. Okay, as crude oil is dropping, that's hurting the energy sector, and that's really spiking volatility and really causing a lot of concern for kind of these defaults that we're seeing that we might see in the energy space, which I don't know if it's going to happen. So crude oil S&P trading very closely together. How far down could both the S&P and crude oil go? All right. So now let's go to the next chart, which is a long-term chart of crude oil. Okay, we obviously need to know how far down crude oil is going to go and then match that up with technical support in crude as well as the S&P, and then I think we can find and isolate a tradable bottom. Okay, so this is the monthly chart of crude oil. All right, now this is obviously a long-term chart, but we are looking at the A-wave decline, which was the credit crisis crude oil collapse. I'm not even going to try to attempt that one again. Crude oil credit crisis collapse. All right, here we go. All right, so there we are going to take this distance that we saw in the collapse, multiply it by your fib projections, and what you're going to see is this 0.618 is very critical. That is 61.8% of the total distance from the credit collapse. Okay, that's going to come in at 52.55. That's going to be a very key critical level. I believe that's going to be a short to possibly to medium and a long-term shot at a long-term low. Okay, if we don't hold 52.5, I'm looking at 34.65. All right, so for now we are looking at 52.55 that is surrounded by two other fib levels right around the $50 mark. So I think we are coming to a low with a close today at around 55.30. All right, so now let's go over to the NASDAQ. This is the relatively stronger index. And what we've seen is the NAS has broken above the September high, and we're now coming back to test it as support. That's at 41.19. If we look at the structure of the decline that we've seen, those of you who are a little familiar with Elliott, you'll realize it's very difficult to count this as a five-wave move. And when you can't count it as a five, it doesn't mean trend, it means simply correction. I think this is a corrective, complex move down into 41.19. We could move down there. We have some support a little low around 4,100, so we're going to be using that as a possible buying point. Now, we have volatility really pumped up with this crude oil decline, so what we're going to do is actually use that as an opportunity to sell some premium. I'm just overlaying the Qs on top of the NAS here because we're going to do it there. Okay, and the equivalent level in the Qs over here on the left scale is going to be around the 100 to 101, all right? So guys, we are going to be looking to sell puts between 101 and 100 in the Qs. If you're not comfortable being short options, naked options, then make it a spread. Sell 100, sell 101s, you know, buy 99, buy 98s. You can do this in January, just short term, looking for a high implied volatility play. We're going to try to be short that premium because if crude can just settle into that $50 range and the NASDAQ holds support, as does the S&P, as does the Russell, which we covered all of those for clients here today, I think volatility will come in a little bit and we might even get a bounce back in stocks. All right, so leave it there, guys. I am going to be on CBC tomorrow, 2:30. That's going to be a Tuesday. And also, guys, if you enjoyed the video, give us a subscribe or maybe click like if you enjoyed the information. That would really help us and let us know you're listening, and we'll do a lot more for you guys. All right. Also, be sure to watch the last CNBC I did. I'll put a link below because I did this literally in the interview. I did this. So anyways, blah, 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 and I kicked my microphone.